Today we're looking at preparing an income statement for a merchandising business or corporation. There you can use the income statement, prepares an income statement and balance sheet similar to those used by the proprietorship. It's just going to have a little bit more depth to it. And then we'll also be looking in this unit on preparing a stockholders' equity. And so this is a big overview. In this page, I'm going to go ahead and connect the slides to you as well, so you have this page to reference back to, because this page is going to be very crucial. So we had the adjusted trial balance we've already created. Now we're going to take all this information and pull it over into our income summary and use it at different spots. A lot of it is going to be stated out in here. We can say, okay, we're looking for sales discount, and so we'll go over here to sales discount and find that number and drag it over. We're looking for sales, so we're going to take that number, drag it over. But it's knowing where to put things in this chart to be helpful. So we're going to take this piece by piece and find out how you calculate each of these totals. And so you'll notice there's bars. Those bars means we're going to either total, add, subtract the numbers before it to create the numbers that are coming next. And so you're looking between bars. If there's if there's a bar above it, you're not going to go above it. And you're going to stay to a column and use that use those numbers to calculate. And so let's go ahead and go on to the first section, which is the operating revenue section of the income statement. And it is your sales, and you're going to subtract from it your sales discount and returns and allowances. So your sales come off of your adjusted trial balance, and then you pull the number for your sales discount and sales returns and allowances. You're going to take these two numbers, add them together, and write it beside your sales returns and allowances. Then you're going to subtract these two numbers, and that gives you here. And this is your net sales number. So anytime we're looking at net sales, so when it says percent of net sales, this is your denominator when we're doing the percent. And so the cost of merchandise sold section is going to be the original cost of the merchandise. That's also goods sold, cost of goods sold, and you're going to find the remaining revenue after the merchandise sold has been deducted, called gross profits. So we're going to go through this cost of merchandise sold. You're going to find your merchandise inventory at the beginning. Write that number down. Then you're going to add into that your purchases, but we're just going to right now record that number. Less purchases, discount, and returns and allowances. So we're going to find those two numbers. And that's going to get us our net purchases. So add these two numbers, put it over here. Then you're going to subtract those two numbers, and that gives you your net purchases. The total cost of merchandise available for sale is going to come off of, I believe, your chart. By adding the 108 and the amount of net purchases, that gives you your total cost of merchandise available to sell. So it comes off your chart. And then you're going to go back to your adjusted trial balance, and you're going to find merchandise inventory at the end. And you're going to now subtract the amount of merchandise available for sale by what's left over at the end of the year. And that tells you how much has been sold that year. So that's the total cost of merchandise sold. To find your net sales, you're going to take that number divided by your percent of net sales. You take this number divided by your net sales times 100 and round to the nearest tenth. And then gross profit is after you subtract net sales and cost of merchandise sold. And so let's look at the operating revenue. So we have our total of our adjacent column. So let's, where I was at, go back. And so that's going to give us our total amount of what we're subtracting. Then we're going to go on into operating expenses. Operating revenue is going to remain after the cost of merchandise sold is the income from operations, or operating income. So now we're going to go through our operating expenses. So these are the things that take to run the business, not actually go into the product directly, but like your advertising, any credit card fees, the depreciation, your rent, your salary, all the things that go into making up the product, but aren't directly inside the product. And so again, you're going to pull these off the adjusted trial balance, and then you're going to total it, and that's your total operating expenses. Then we're going to subtract, and that's income from operations. Then you're going to see if there's any other income that you have. So you go back to your adjusted trial balance, and they had some interest income, and so they recorded that amount. And then you have your net income before federal taxes. Then you find your federal tax expense, record it, and then you subtract, and that's your net income after federal taxes. That's the end of the chart. All along, when we're doing the vertical analysis part, the percents are divided by your net sales. It's a percent of net sales. And so let's go ahead and look at an example of us working through this. And so I'm going to go through most of your work together. This chart, you're just going to need to go to your income statement and see, is cash on your income statement? If so, which one of the sections is it in? And record it. And you go through each of these charts to do that. So let me go on to the next. And so the next part is going to be our calculations page. And so when we're doing our calculations, the way we're going to be doing these is, if you think about the process that we went through on your chart, the first thing we found was your net sales. So that's step one. And so we're just going down your income statement. And so the net sales was the first thing that we had. And then the next thing we did was our net purchases. The next thing we did was our cost of merchandise sold. And the last thing we did was our gross profits. Your cost of merchandise sold formula is beginning inventory. Add in your net purchases, and that gives you your total cost and merchandise available for sale. And then you're going to subtract out your ending inventory. Your gross profits formula is your net sales minus your cost of goods sold your net purchases is your purchases minus any purchases discounts you've had minus any purchases returns and allowances. Net sales formula, similar idea. Sales minus any sales discounts and minus any sales returns and allowances. And so now we're going to be determining our gross profit. So this is where we're going to fill in. And so we're going to start filling in to your chart. So we're going to start off with the information for the company. And so it's Superior Corporation. And this is our income statement for the year, or excuse me, I always want to put the, but it's for year ending December 31st, 20 dash dash. And so our first thing that we found was our operating revenue. And so when we looked at our adjusted trial balance, so let's go ahead and I'm going to pin this to where I can slide it down over here. I come over here and I look for operating revenue. Gosh, I'm sorry. I was looking for sales. I'm looking right at it. And it is 505,897.40. And then we are going to subtract less our sales discount. And our sales discount, again, we're going to come over here and find our sales. Our sales discount is listed right underneath sales. And that was 1318.55. And then our returns and allowances is right underneath that, and that was $3,153.26. When I add those two together, I come up with $4,471.81. So now the next step is we need to find our net sales. And so we're going to subtract the two numbers in the previous column, giving us 501,425.59. We're not doing the percents just yet. We'll do that in the last step. And I'll show you all how to do, we'll talk about one of them, and then I'm going to make you all do the rest of them on your own. And then the next section is the cost of merchandise sold. And the merchandise inventory as of January 1, 20 dash dash. And the beginning inventory was 86,789.15. And so that just gets pasted down here. Oh, I didn't copy it right. And then we're going to find our purchases. So we're going over here, find our purchases number, which is that 203 number. So it's 203,881.01. And then again, we're going to do less our purchases discount, which is right underneath purchases. And so is the returns and allowances. So we had $737.71 and $1,196.01. And when we total those, we get $1,933.72. And so we're going to subtract those two numbers and come up with 201 947 and 29 cents. So we're subtracting the previous column because it says less. And that gives us our net purchases. Now we're going to find our total cost of merchandise available for sale. And so to find our total cost of merchandise available for sale, we take our merchandise start plus anything we bought that year and total those 288, 736, and 44 cents. Now we're going to subtract less our merchandise inventory. And so we got to find our merchandise inventory, which is up in the top part because it's an asset. And it's $81,017.26. So we said that we're subtracting that. And it's our merchandise available on December 31st, 20 -- so available at the end of the year. And so at the end, that's our cost of merchandise sold. And so we're going to take our total cost and subtract our ending inventory. And that gives us, we sold $207,719 and 18 cents. And so we're going to next find our gross profit. So our gross profit is found by taking our net sales minus our cost of merchandise sold. And that gives us $293, 706, and 41 cents. So we're going to go on to the next step. Oh, I clicked the wrong thing. So now we're in our next section, which is our operating expenses. And so we've done all of our income from operations. We found out how much we're getting there, and now we're going to look and see all the total operating expenses. And so these numbers come straight from your chart. And remember, your expenses are listed together. And so we're going to go down to our expense section, and we're basically going to copy all of these expenses over into our chart. And so advertising expense is the first expense. And we start recording from that point down. So advertising expense was $3,744. Our credit card fee expense was $5,473 and 76 cents. Our depreciation for our office equipment was $7,485. Our depreciation for store equipment was $9,830. Our insurance expense was $6,000. Our miscellaneous expenses was $2,796 and 3 cents. Our payroll taxes were $14,375 and 91 cents. Our rent expense was $6,720. Our salary, which is our biggest expense we had in this section, was $131,978.76. Our supplies expense office was $2,860.89. Our expenses from the supplies expenses for the store was $3,523.33, and our uncollectible account expenses was $2,384.10. Our utilities, I got off on the line. And our utilities expense was $3,972.34. So we're going to total that up. So this is our total operating expenses. And that's $201,144.12. And then this, we're going to find our income from operations. So we need to take our gross profit, this is before all our operating expenses came out, subtract out our operating expenses, and we found out that we have $92,562.29. And then we're going to add in any other revenue. So we're going to look back over here and see, is there any other things that are being added into our income? And so the interest income was added in. And so that was $466.20. And so we are going to now have our net income before federal income tax. So this is what they are going to determine our income tax based upon, is this $93,028.49. We did that by adding those last two numbers together. Again, keep in line where those rules are, those lines are, and you're staying in between those. Now, we're going to have to subtract, after we calculate our federal taxes that we owe, less our federal tax expense. And that's going to come off of your chart. It's right here on this line. So $19,879.69. And this is our net income after federal income tax. And we are going to subtract our federal income tax, and that gives us $73,148.80. Now we're going to go ahead and go on to the next bit. And this is where we do our percent of net sales. So, like I said, I'm not going to go through the entire chart because it's very repetitive. But, so you're going to take, and your percent of net sales. Net sales is 100% of net sales. Then you're going to take this $207,719.18 and divide it by the 501. And that gives you 41.4%. and you're going to do that all the way down.